Hi, it's Paul from globaltrainsoftware.com and a very quick tutorial video for the perfect storm with our range breakout indicator. The xBrat range breakout looks and identifies ranges and we can trade out of those ranges with biases. But I'm going to actually add the bias depth heat map as well, and then the manager to manage this trade, because this happens a lot with copper. So we use copper on the 5 minute. And we look at the New York Gold Pit Open, which is 8:20 a.m. EST. So first thing, we have our we identify the range, but also this is coloured green for bullish bias. We see the actual range is defined here, and the bias for the range is coloured green. You can see further on in the day it was yellow for neutral. So this range is identified, and then because it's coloured green, we look only for the long breakout here. A couple of candles later, we get the confirmation. Really, we look up 6 different time frames here with this bias heat map. They're all bullish. Okay, so we're going up 6 different time frames and they're all bullish. So that gives us the signal, the confirmation, and then the entry is literally one tick breaking out of this opening range, gold pit opening range for copper. Now this then goes, then we manage this with the manager. So the manager is set on day trading aggressive. You can see that there, because this is a breakout trading strategy. We need to be aggressive with this. So we get the initial impulse move up, and then we start to go sideways, but these blue dots underneath the candles mean lower than average volume, so there's no need to panic. Then we have another big push up, and then we start to come back down, and then we get a down candle with higher than average volume, and 4 candles in advance we can see the ribbon actually turns red, which means we're getting into that time to get out of this long trade. So this trade was, I think it was around about 90 ticks, something like that, 91 ticks, this trade for the opening range breakout. Now obviously this strategy is good for oil, for the oil opening range at 9 a.m. EST. We look to trade currencies on that New York Gold Pit Open, the European Gold Pit Open as well. Really strong. Different time frames. So we use 5 minutes for metals and energy, we use 10 minutes for currencies, and we use 15 minutes for indexes. But identifying those strong data points, but also market opens, we look to define the range, look at the bias for the range, and then we trade the breakout of that range. Now for me, if the bias is neutral yellow, we just don't trade. We look a little bit further on there. This is the Australian Stock Exchange Open here. If people wanted to trade out of that, you know, it's pretty messy really. The main impulse for copper is that gold pit open, but also look at this. Look at the European gold pit open here. Even though that's a red candle, we are bullish for the bias on the opening range. The next candle's within the range, but look at the bias heat map here, all green. Look for the long breakout, and there it goes. Okay, now we have the London Stock Exchange Open. Okay, that range is defined here. We have green for go, but it didn't break out to the upside, so there's no trade there. We're still in this trade for the European Gold Pit Open here. Okay, we're just waiting now. This pullback has lower than average volume with the manager here. The ribbon is still green for now. If it changes red, we just literally manually flatten that trade, but that was the entry here. So good. I mean, look, it really is simple. New York Gold Pit Open for copper is fantastic as long as we've got the bias with us. We've got the confirmation from the bias depth heat map. We've defined the range. The range is telling us it's green, let's go. We go long and we manage it with the manager, and just the same with this European Gold Pit Open here as well. Very simple. Okay, hopefully that helps. Speak to you all really soon.